This is episode 211 of the Andrew Hines Real Estate Investing Podcast. This episode is brought to you by Control and Compound Financial. They teach real estate investors how to multiply their wealth using infinite banking strategies. For a complimentary wealth coaching session or to learn more, visit www.controlandcompound.com/Andrew Hines. Are you interested in getting started in investing in the United States but not sure where to start? Why not attend the Investing in the U.S. Mastermind hosted by myself and Nick Van Dyke on March 4th, 2023. Nick and I will be covering topics ranging from A to Z, new construction, multifamily development, Airbnb, and much, much more, as well as the basics, including opening a bank account and understanding the proper corporate structure. We'll have several keynote speakers touching on very specific topics. And most importantly, you'll be sitting in a room with people who are highly focused and highly committed to investing in the United States. For more information, visit investingintheus.com and send me a DM on Instagram for a special discount code. I'll look forward to seeing you at the event. Welcome to episode 211 of the Andrew Hines Real Estate Investing Podcast. Today I have Adam Martin on the show. Adam was on the show right back near the very beginning, somewhere around March 2019. I started recording this show in February 2019. So he was an early guest and he was up to really awesome stuff then. And he's certainly evolved since then. Adam is an entrepreneur through and through. You can tell his mindset's in the right place. You could tell that he works a lot on personal development. He's built a $3 million a year wholesaling business and since scaled that down and converted it into an acquisitions business. So for those who don't know Matt, he was working with Jeff Weibo and Matt McKeever at the time, and then he eventually bought them out of the wholesaling business. And this was a business that they just started not really knowing what they were doing. So Matt started the business, everyone was sort of guessing, they were working it together, but we really talked about the dynamic that these guys had when they all lived in a house together, kind of like people do in university, except they were all focused on generating income in real estate. This is something I've always respected the heck out of them for, because I think that that's just such a lethal combo, something that helps keep your mindset in the right place. Of course, it's a grind, and Adam dug into that experience in this episode and much, much more. It was super interesting. We could have gone Joe Rogan style, a whole 3 hours on this one, but we kept it pretty close to a 1 hour episode. So just before we jump into the episode, if you could make sure you like, subscribe, hit the notification bell, leave us a comment, let us know what you think of the episode, or if you have any questions for us. And if you're an audio listener, make sure you leave us a favorable review and a 5-star rating. It'd be greatly appreciated, and it'll help more people find the show. Also, I want to make a quick note about REI Hot Seat. If you haven't been following that show weekly, I highly recommend you do. If you love digging into the numbers, digging into the analysis, you won't want to miss this one. Also, Jacob Campanero is constantly sharing deals that are off market. He has a direct line on. So if you want to see these unique deals, make sure you're tuning in. We'll see you over there on that channel. Now, without further ado, let's jump into episode 211 with Adam Martin. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I've got back after a few years, since like episode 23, Adam Martin.
Yeah, man, it's been a long time since we last talked, and you know, a lot's happened in the world and a lot's happened in business, so I'm excited for this one.
Yeah, that would have been it was 2019, early 2019 that we did that, probably March or something. So yeah, it's been a while, 2023 now. So I guess we're just about to it's almost 4 years then.
Yeah, no, it's been a long time. Like a lot has changed since then. I actually went back and re-listened to the episode just because I'd literally forgotten everything I was talking about at that point. And we were talking about sort of my first deal. We talked about vendor take-back mortgages. We talked about sort of like the beginnings of what became the wholesaling business. And yeah, it was a fascinating episode.
You've done so much since then. Yeah, you were very much just kind of getting it started. I think you were living with Matt McKeever and friends in the mansion. And tell me what's happened since then.
Yeah, I mean, it's been an exciting few years. Obviously, the world threw some curveballs at us, which was fascinating. But in between there, like, bought several buildings. I know we talked about that first VTB where I got like those crazy terms, the 96% loan to value, 3% interest, 13-year term. Yeah. I sold that building, but I've negotiated about another 15 VTBs of not the same caliber, but similar caliber. Yeah. So that's been exciting.
Well, and we'll jump into some examples of it because that's obviously a very valuable strategy. Vendor take-back mortgages, for anyone not familiar, these creative strategies are going to become more and more useful with the current market. Yeah. And the high interest rates, right? Getting around those high interest rates. Yeah. Are you still negotiating deals now?
Yeah, absolutely. We up 5 units for the year so far, and I think it's January 11th today, so not doing too bad, but just got a very large, like 90% VTB on a commercial residential split building, closing March 30th. So
And what's so that's a 5 unit?
Yeah.
Yeah. Okay. So whereabouts is that one?
It's in Stayner, Ontario, which is kind of the armpit of the world where I was growing up. But I'm from Collingwood, so Stayner is a market I'm very familiar with.
I've driven through there, yeah.
Yeah, and that's the thing is you actually have to drive through there. So if you want to go to Collingwood, where a lot of people from Toronto have their cottages or their little ski chalets and things like that, you have to drive through Stayner. So it perfectly lines up with Airport Road and anybody coming from Barrie.
Yeah.
So it's actually like an extremely high traffic area that you just must cross through if you have your place in Collingwood. So
so if you're coming from Toronto area, you're gonna go through there.
Yeah, you have to, and it's about maybe 15 minutes from Blue Mountain. So it's actually a really ideal location, and it's positioned perfectly where the local people never really wanted to live there because it didn't have the amenities. Like it just didn't have the, some of the nicer things that Collingwood had in its downtown or what Blue Mountain Village was offering.
Yeah.
But since, Collingwood's been appreciating massively for the last few years, and like every other, big city, small town that's adjacent situation, things have just overflowed. So
you're getting people renting for going to Blue, they're renting in Stayner.
Absolutely.
So you're doing vacation rental with this, or is that the plan?
No, we'll do long-term.
Yeah.
The long-term rental numbers there are fantastic. Again, as a consequence of Collingwood blowing up, like, I even was looking for the last 2-3 months for a place in Collingwood. And if you're looking at rent, it's anywhere from $3,000 to $4,000 a month for a whole house.
Yeah.
And if you're looking at seasonal rentals, I mean, it's like 20 to 30,000 to stay for 3-4 months with a fully furnished seasonal. So a lot of the locals have been priced out of the market, and naturally they just move to these other communities that are basically the same. I mean, a 15-minute drive, if you work in Collingwood, that's not a big deal, right? So that's pushed rents up there big time.
Push the rents up. So just pushing the people out of Collingwood proper, Blue Mountain proper, they're going to go to these other cities. So what are you looking at then for, like, is it a mix of 1 and 2 beds, or is there a...
So there's 2 2-bedrooms, 1 bedroom, and then 2 commercial units in the bottom.
Okay.
The commercial units, I honestly, I don't really know a lot about commercial. I've only done multifamily residential or single families to this point. So it's going to be a learning experience for me. But currently there's a barber shop there and a like custom t-shirt / like printing business that's in the bottom. So yeah, I mean, I'm excited to see where that goes because I really just don't know about that type of thing.
What kind of income are those commercial units bringing in?
They're currently paying just over $900 a month.
Each.
Yeah.
Okay.
And then the residentials were actually surprisingly paying about the same. So for all 5 units.
times 3.
5.
So 900 times 5 across the board then.
Yeah, it's roughly that, and then they all pay their own utilities.
So 4,500, everyone pays their own utilities. So what other expenses do you have on the building? Just taxes, insurance?
Taxes, insurance, and regular maintenance or whatever will be included.
Yeah.
So it's a decent sized lot, so we'll have like snow removal, grass, that type of thing. But we're getting one of the units vacant on possession, which is fantastic, and it's a 2-bed. Market rent there might be 1,800, something like that.
Double that
about
one
double, I would think. And so I think that's going to be exciting. But the real thing for me, again, has always been like, if we're talking about price or terms, I'm going to prioritize terms. And so we got this 90% vendor take back at 5.6% interest only payments. And that's a 3-year term. So it's fantastic.
Yeah, interest only.
And the purchase price, I think, is $716.
Yeah, I was going to ask you how you went about pricing that out. Like, did you run like a projected income? Like, what did you figure your cap rate was on purchase, and what did you figure you're going to get it to relative to what you paid?
This is again like another sort of embarrassing thing for me, but I didn't really look at that.
Yeah. And that's totally fine. Like, everyone has their own look, right? Like, everyone sizes things up differently. So I'm just curious how you did.
Yeah. So what I looked at was sort of the current rents, what I figure market rents are, and
what do you think, like, across the board? So 1,800 times 3 plus potentially more on the commercial, or even leave the commercial alone?
I have no idea what the commercials will go for. I have an idea that you could get about 1,800 average for the 3 residentials.
Yeah.
And that's where I get excited about, again, those terms that I got. Because with the current vendor take back, the actual mortgage payment is 2,700 and change. So you're cash flow neutral day one with a vacant unit. And so once you actually fill that unit at market rents, and of course there will be maybe 40,000 in renos or whatever, like it needs flooring, it needs kitchen, it needs paint, it needs to be cleaned up.
Yeah.
Once you've done all that stuff, it actually looks like a pretty exciting opportunity.
So let's just go through the numbers real quick here.
Sure.
So 700 and what to buy?
716. It's like 715 and change. So
okay, so 716, and then reno, you're not renoing anything else, but you would reno that unit.
yeah,
like
probably 40.
40.
Pretty clean, simple 2-bedroom renovation.
Okay, so you're gonna be all in for just around 50,000 or 750, something like that. 756. Okay, and rents could be. I just ran some quick numbers. So say you did 1,800 times those 3 units. And I guess you would have to renovate those units too, though, if they turned over.
Each one would require roughly the same investment. Like they're all pretty tired. But there's nothing, from my perspective, there's nothing structural or like anything serious. It's all lipstick stuff. The one question mark that I actually do have about the building that I'm reserving in my head like 40 or 50K for is I just have no idea what condition the flat roof's in. There's no water damage anywhere at this moment, but like I feel like those are the type of things where you just wake up tomorrow and all of a sudden it's like fully in need of repair. So
to replace the whole thing.
So that's in my mind is something that's like a question mark. But other than that, everything else will stay. It's really just lipstick in the units.
Okay, so what are approximate taxes on that place?
No idea.
Like you think 5, 6, 7 grand, something like that?
I bet you would be closer to 10K.
10K
for the year.
Yeah, and then insurance on something like that, you're gonna be like 4 grand or something.
Yeah,
because it's got a commercial element.
Yep.
Maintenance, I'm gonna leave 5 in there for utilities. Nothing, right?
Yep.
So do they have electric baseboard heating in those units? Or
it's furnace.
Central boiler?
It's like a central boiler.
Okay, then you'd probably have central water and gas, no?
Yeah. Honestly, I haven't even been to the building.
I actually love that. Like,
I literally haven't been to the building.
So let's just say 3,000 potential utilities just for the common stuff.
Yep.
If that's there. I want to get into like that mindset, how that works. Are you going to have it managed, or do you have your own team that'll manage?
We have an internal team that's so far been doing very well at managing things throughout London and Cambridge. So it's a bit far for them to like manage 100%, but I don't see any real reason like once these units are turned over that it would need a bunch of management. So
yeah, you could probably manage from afar if you had somebody handy nearby that could just take care of things.
Yeah, and I do because it's close to my hometown as well. So I actually do have a superior network there of contractors and like that type of thing. Like you needed maintenance, it would be simple.
Yeah. Okay, so let's say hypothetically, management, I just threw in 5%. I mean, you're probably not that. We can play with that, but 1,500 for landscaping and snow a year. I mean, smaller towns, you can tend to get a little bit better pricing on that kind of thing. Miscellaneous 500. I've got 3,000 for utilities, 4,000 for insurance, taxes 10,000. And if you are all in for after the renovations of those 3 units, you'd be 836, and that's about a 6.9% cap rate.
Yep.
But the most exciting thing is obviously your financing terms, because what's the mortgage amount?
It's like 2,700.
No, the principal.
Oh,
amount.
The actual principal. Yeah. It's 90% of 716. So whatever that is, like six something.
9 times 716. 644.
Sure.
Yeah. Okay. So that works out to be about say 77% of what you'll be all in.
So it might not be exactly 90%, but that's the way it looks in my mind.
Okay, well, let's just say hypothetically you're there. So you're, we'll call it 1,000-year amortization because it's cash. It's just interest only, and you're
5.6.
Yeah, that's pretty generous on the interest rate.
It's not bad for
that's good.
These
that's
days.
Good for you.
Nice
that's good for you. So the seller was a little resistant to giving a. Did you offer that, or did?
He actually came up with the terms, really, which is kind of exciting for me. Like,
really?
Yeah. The thing for me was I had positioned it that price was aggressive right now for the current rents. and it had already been talked to him. Like essentially, two other people had already tried to buy it.
Yeah.
They had issues coming up with the cash, which I found a little bit ridiculous given the down payment. Like it wasn't a large down payment to me, but I personally know these other two people, and they just kind of slid the deal over to me, and I was like, yeah. Of course, like I'll talk to this guy and we can figure out the terms. So negotiated the vacancy. He actually wanted to do the interest only and that rate. And then the real part on my behalf was just really getting in that loan to value locked in.
Yeah. So you just wanted to get 90% or above. Yeah. Obviously that helps.
There. Yeah.
That helps a ton to do a lot more deals. Okay. So you mentioned you had a contact that shared it with you.
Yeah.
That helped. The area itself, you've got contacts there, no problem. Do you own other stuff in that area?
I own nothing there, so that was a little bit unfortunate. But I have my primary network there of contractors, people that can do that work for very cheap for me. And I actually have a few people there that I've done private loans for that would probably prefer to pay me back in labor rather than the actual cash, which again just works out for me in terms of a cash flow position. So
nice. Well, this one would work out to be, and based on my rough numbers, and obviously there's going to be a give and take here, but $1,855 a month cash flow if you turn over those other two units. Now that's assuming you put in 40 grand each time you turn them over. So those numbers would be adjusted. If you didn't do that, you'd still probably cash flow. We could play with that real quick as well. But it looks like a solid deal, and potentially in this market, rent's probably going to continue to go up in those type of markets.
I would think so, but we just experienced something strange. I have a triplex in London, and it was actually interesting to have it rented at rates that we thought were, a top of the market, but still competitive. Sat for a little while, and there's some seasonality there because we tried to rent it kind of December. So that's always brutal. Like you obviously, if in a perfect world, you just wouldn't do that, but that's when we finished renos. So we had 2 out of 3 units vacant across December and now January, and just got a tenant. Like literally today, kind of finalized paperwork. He got his insurance and all that. And he ended up signing with us at a price that was like $150 a month less than what we thought would be like a competitive top of market for a freshly renovated unit. 1 bed.
Okay.
It's only 1 bed, and we locked in for that $1,500 a month plus utilities.
A 1 bed. And whereabouts is this, you said?
It's in London. It's I don't even know what the neighborhood's called. It's a pretty good area. It's like B+.
Okay.
Central Ave. The nicer part of Central Ave. So
interesting.
I guess it's technically Woodfield there. Okay.
And so just was it a smaller unit?
Yeah. I mean, it's not a large unit, but we renovated it very nicely. Like nice shower, tiles,
included parking
everywhere. Parking's included. Laundry is the one thing that's not in his unit. So there's paid laundry at the back of the unit for everybody. So maybe that has
some people don't. I feel like that's, for me, that'd be a deal breaker. Like I want laundry in unit, but and I know some people probably feel the same. Like a lot of professionals feel the same. They want laundry in unit.
So, I would assume that was kind of one of the details that actually did get us.
Because if you look at rentals.ca, they're year over year, and I haven't looked it up in the last week, but as of I think December, they were up 30% year over year rental rates on 2 beds.
Amazing.
And similar for 1 beds. Isn't that wild? Like in 1 year.
No, it's extraordinary. And I'm not sure. I'm sure we'll get a little bit more into sort of our theory of what's likely here. But from my perspective, like I would think exactly what you just said. Like I would think that rents would continue going up, and that it would be harder actually for the average person to own a home in the next 0 to 3 years.
So I mean, as I've mentioned a few times in recent history on this podcast, like I think that there's just not enough precedent to suggest rates would come back down within the next year. Like historically, there's just pretty much no precedent for that.
Right. In
this type of situation where they're trying to combat a pretty high inflation that's obviously understated. At very most, I would say a ceasing of the raises after they do these next 2. And that's because if you look at year over year, if you look at where our inflation started to peak in terms of percentage rate year over year, was that closer to the summer, like April, May, June, that kind of time frame, we're going to start to see the relative inflation look lower because you had your big jump a year before. So I think we're going to start to see that CPI come down as a percentage year over year increase, and that might cool them off for a bit. Who knows? Maybe they do start dropping rates and say, hey, we overdid it. We overcooked it. It's possible. I mean, you could say things have no precedent, but look at the last 3 years. That had no precedent. So,
yeah.
Or at least that we know of, right? I mean, history is like, how much do you really know? You know what you were told.
Yeah. And I think that's a great perspective as well. But I do have thoughts that like political, like elections or something like that could just change the landscape a little bit, or perhaps be like not a black swan, but definitely like an event that would potentially change the course of where we're going. But in any event, I think all those changes are still slow. So I think that makes rentals very attractive for this year. And we've really wound down, like we've ratcheted down the wholesaling business quite a bit with that in mind. So from the perspective of like, this is probably, at least from my point of view, we're entering a buying season rather than a peak market bull run. Everybody wants to like viciously overpay for properties.
Yeah, we were in a very extreme seller's market. And
exactly.
Depending on where you look, you might still be in somewhat of a seller's market, but relative to what it was, it's not even close. Yeah. And that's why prices are coming down, because where supply and demand meet is your strike price. That's where your properties are trading. So, I mean, I guess time will tell. I still think, like when people see these interest rates and they're still not sure, they still see prices coming down, let's just rent. Yep. And that could be for years yet. Like the prices could still be, stagnant, maybe coming down a bit for years. So I do think that there's opportunity. But with that said, from an investor standpoint, isn't this always what we wanted? We have an opportunity to buy with, record-setting rent rates and prices down at, what are we at now? Almost 2019 levels, 2020 levels, early 2020. That's you ask anybody last year if that sounds appealing and they would have said so. Yeah.
People are funny with their psychology though. Like everybody wants to buy the top and sell the bottom. Generally speaking, like I think that's why you see congregation of wealth at the top. It's like the people that are disciplined not to sell the bottom and not to buy the top are likely the ones that win. And it's like a fairly basic equation.
Yeah. I mean, well, why don't you talk about how you guys adjusted when the interest rates started getting jacked up? I mean, there's so much we could talk about since the last time we talked, but when interest rates started getting jacked up, obviously you guys probably had quite a few properties under contract. It scared some people, but there was still stuff happening at that time, right?
There was a surprising amount of business that continued longer than it likely should have. Like if people were really thinking this through, like a lot of people were still in the flipping mindset. And so like I've been exposed now to hundreds of deals, right? My wholesaling company took down hundreds of deals in the last few years, and we've dealt with probably close to $100 million of volume. And so that's allowed me a relatively unique insight into, what all of the investors are doing. Yeah. It really is charitable when you consider like what's your individual perspective and how like broadly can you think versus actually negotiating and putting your hands on the deals that hundreds of investors are thinking through. Because often we would have an opportunity to talk through like, what's your strategy on this? Like how do you imagine this is going to be executed? Yeah, and a lot of the people who have bought our deals have made considerably more money than we ever did on the deal. But that's how the model was sort of laid out. Like that's how it should have played out. One thing that I found surprising was people continued buying with a flipping mindset much further into the market that I would call like uncertainty or like heading towards maybe a bearish market or, recession type behavior, but they were still flipping and very aggressively approaching deals.
And that's how you lose money.
Well, that's how for sure.
Flipping in a market that's declining is a very tough game.
I don't know who can. I think the only way that you can come out ahead of that is if you're like extremely efficient somehow.
You're really quick and you're buying at like 55 cents on ARV, something like that.
You have to be buying really great. You're super efficient and your cost of capital is really low, I think is the only way to really do that. But that wasn't the profile of everybody that we were seeing that were still hungry for deals. So we started noticing that fairly early, that the market conditions had changed and that the deals that were coming towards us. So that there's this dichotomy, right? The seller wants the price that was apparent over the last 90 days. The buyer wants the price that they forecast for the next 90 days. Yeah. There's this really bad dichotomy there where like basically everybody wants the opposite thing. The seller's convinced their house is still worth, let's just say $1 million.
Yeah, that's the part that takes forever. It's reconvincing the sellers of what their property's really worth.
It's so fast because the buyers are really quick to understand like, oh, if this is a falling knife, it's going to continue falling, right? Gravity does its job. The seller doesn't want to, I don't know if they don't want to believe cope with it or whatever. And so that posed a really interesting challenge for the wholesaling business in and of itself, right? Is like, we are now facing a very hard time to get great deals, and our buyers are scared to buy even good deals, right? Where in the past few years, it's been very easy to understand the math of a bull market, right? Like generally speaking, a lot of people were speculating and they were buying buildings, and yes, they were doing strategic renovations, but they were also taking gambles on buildings that were, objectively overpriced. But, what the hell are you going to do to tell somebody about their business model? Like when you're doing a wholesale deal, you're not there to tell somebody how to run their business. You're there to understand what exactly their needs are, right, in the deal. So from our perspective, we saw this happening. We saw the market shifting, and I've still been really careful about what deals I've entered. So I think all of this has given me a perspective that like, if you can detach from the situation, take a 10,000 foot view and just try and be objective about what you're actually buying and try not to fall into the hype in the market, the excitement in the market, numbers go up, a printing press is running. It becomes pretty clear that like, there was a cliff here that we have to fall off. And so I was very careful with the deals that we bought the last couple of years. I've stuck and sort of made it my brand to really only buy the deals that are vendor takebacks. And my thesis there has just been to be insulated from market conditions like this. So there's a couple things when you negotiate these deals. You need a long enough term to truly be insulated. So a lot of people, vendor takebacks have come like into the meta recently. People have been talking about them the last few years. It's been coming back into vogue. I think they were very popular in the late 80s, 90s when interest rates were insane. And then for the last few years, the way that I positioned it to every seller that sold to me is just like the reason I'm thinking about it so much isn't the interest rates, because they were so low, like 1.6, 2%, right? Sub 3 rates for the last few years. And from my perspective, it was the purchase price that was doing the same thing that interest rates were doing in the 80s and 90s. And that was a way to pitch some of the old boys that knew exactly what I was talking about. Like if you wanted to buy a building from somebody that's been investing for 30 years, if you explain to them that the purchase price problem of this like massive inflationary appreciation over the last few years is the same problem that a high interest rate was in the 80s and 90s, they instantly understand what you're talking about. And they've been very willing to offer you a vendor take-back mortgage. So from that perspective, though, you have to appreciate at the same time when you're negotiating this vendor take-back that like market conditions will happen regardless of the terms that you negotiate on this vendor take-back. And at the end of your term, you still face market conditions. That's a real consideration when you're looking at these vendor takebacks. It's like you must insulate yourself from the risk that is in the future. Now, the problem with that is you get into these crystal ball situations where like, what's in the future? Well, it's really hard to tell. Like, who saw the rates going from 1.6 to where they are today?
Yeah, I mean, how much insulation can you really have with 3 years? Again, like I go back to the precedent in the 80s, it was like, mid 80s, high teens interest rates, took until 2000 to come down to 6% ish. And kind of stayed in that ballpark up until 2008, that's when we finally started to see the era of like 3% and lower kind of rates. So, how much insulation do you have? I mean, of course, precedent just doesn't mean that much these days. Like, I mean, of course it still does, and that's not advice to anybody. But when you see things that just don't have a precedent, it makes you scratch your head and say, hey, what's going to happen? And that's why nobody has a crystal ball. No one can say.
Well, and that's where buying, like focusing on the purchase and buying smart has always been the way to do it. And
do you feel like you're getting great deals, like that $715,000 that you paid there? Is that a great deal? Is that an okay deal? Is that a deal that you paid maybe a bit more than you should have, but you're getting great terms?
On that particular deal, if you look at that's like roughly $140 a unit. Your rents are going to come in at roughly that $1,600, maybe $1,800 on some of them. That to me seems like a great deal. And when you look at the other conditions, I think there's an issue with isolating a particular property at a particular snapshot in time and just not thinking about what else is going on. Like Stayner's population has pretty much doubled in the last foreseeable history. My lifetime anyways, it's at least doubled, maybe tripled. They're approved now to get a McDonald's in the town. Following McDonald's, you'll probably see a Starbucks. You'll see all those basic things coming in and all those anchor tenants. They've got subdivisions coming up everywhere from every side of the town. And when you look at the explosion in Collingwood and Blue Mountain, and you just see, like, just look at the future, right? And I've been working and doing all my investing primarily in London. You look at Kamoka, you look at Lambeth, you look at Kilworth. These were obvious plays. What was there when they were obvious? Nothing. It was like a terrible little diner, right? And a gas station. And now it's like, oh yeah, and now every single person that wants the American dream.
Something. I think you're onto something there anyway. I think people even use Stayner as like a bedroom for Blue Mountain. You know, they get little bus transport that can take people up to Blue and back. Like that's all it takes. Just a quick little bus shuttle.
The other thing to consider is they've recently built a casino in Wasaga Beach, and I'm not going to go ahead and say recent because it actually did take them like 30 years, my entire life, to build this highway. But they now have this freaking highway that's incredible. I mean, now you go from Wasaga Beach to Collingwood instead of on a 2-lane road, right? Single. It would take like 35 minutes before. Now it's like 10 minutes and you're there because it's
like a 4-lane highway.
Yeah, it's just a big highway, like what any other city would ever have.
You can go 100 on it.
Yeah, you can go 110 on it. Right. And so you're flying down this road now and you can just see what's going to happen in the next 10 years. And I think that's a better perspective. I like to think of these acquisitions as like, the price or terms today, obviously they need to make sense. It really does. If you can insulate yourself for 3 years on a vendor take back mortgage from the local market conditions, that's great.
How do you feel that it's insulated you from the local market conditions?
Well, at 5%. So my way of thinking about the vendor take back mortgages is, am I happy with these terms regardless of what happens outside of my deal? So when I had bought that first deal at 3%, right, 96% loan to value, 13-year term, whatever, my mindset there was like, in 13 years, am I going to be pissed off that the interest rates are 1.6% and I'm paying 3%?
Yeah.
No. You don't care about that. And from my perspective on this particular deal, I have no idea what commercial lending rates are right now, but at 5.6%, if I don't have to go qualify for that, I don't need to talk to anybody about my finances, my credit, my utilization.
Oh, no, that's amazing. Yeah.
All that shit. And I can just instantly walk into this deal that's cash flow neutral, day one, with a vacant unit. That's all I'm thinking about. Now, in terms of the market conditions, if rates go up, in the next few years, say they go to 8%, 9%, whatever they look like on a commercial mortgage side of things, like I'm sitting here paying 5.6 during the period where cash is most important to me. And that's the turnaround period.
Yeah, so you're going to get it turned around. You get the rents up. You might replace, or renegotiate the commercial tenants, get that up a little bit so that when you do come back around to the higher interest rate, if that happens, you'll have the ability to weather that storm. It'll be okay.
Yeah, and for me, it just comes, it's sort of a straight line methodology of looking at the building. Like I always know what the building's going to cost. It's that $2,700 payment every single month. Right. And that really helps me. And I don't know how other investors think through this, but for me, that really helps me to understand, like, on all of my buildings, I know all of the payments for the foreseeable future. And that just helps me to detach a bit from the situation and then prioritize the things that need to get done in order to face whatever market conditions are actually happening.
Well, outside. I mean, at the end of the day, the price, if you're not planning on selling immediately, the price of your building according to the market shouldn't really matter that much.
It doesn't, unless you're trying to refinance or something.
Yeah, if you're trying to refi, that matters. But if you've got your financing figured out, you're willing to put in the reno money and you don't need the refi, I think that you're kind of in a position where that works better. I mean, I love to have the ability, 10 plus years if I buy something. Like, hey, if I needed to, I could hang on to this for 10 plus.
Yep.
Because it's a good building. So you don't buy buildings that suck. Buy buildings that you wouldn't mind owning for a long time. And that way, if the prices will fluctuate, I do think on the other end of this, we go to well out of reach prices, highest we've ever seen. I do think and I don't know how long it takes to get there. That's the question mark. But I mean, if history's going to taught us anything, real estate is the yo-yo on an escalator. It's always going up, but it's going up and down as it goes up.
Yeah. And I fully buy into that mindset as well, that like there's probably like a super cycle type situation on the end of this. And I would like to be positioned for that. So, the last few years, we really prioritized, because I was uncertain of when this cliff was coming, but I knew for sure there had to be something waiting for us. And so we did a lot of deals. Like we did a lot of deals. Our buyers made a lot of money. We made a lot of money, built a great and successful team, really systematized and like built the processes out to be like, if not the best wholesaling company in Canada, then in the top 3 for sure.
So who's involved in this wholesaling company?
Well, again, we've really wound it down. Like I took it down. So I had
who were the partners or are the partners in it?
When we started, it was Matt McKeever, Jeff Weibo. I bought both of them out at some point, and then really took into just hiring people. So we hired a very high performing sales team. Found a business partner for a separate business in Rebecca Matheson, who's been working with us for a few years, and took the business to 7 figures in a couple years, and then did that again, like tripled sort of our best year. And then last year was really slow because, like I said, the market was transitioning and it was very difficult to navigate. So we really pared it down and started shifting our focus into the acquisition side. And
so just building your portfolio.
Yeah.
That makes a lot of sense. And I feel like it'd be a similar story from a lot of wholesalers. I had the guys from SLG on a while back, and they were still, pushing stuff. They weren't kind of sure. It was a little earlier on in all this. But I think everyone's getting that same resistance, right? Because it takes so much time for sellers to adjust their expectation.
Yep.
That's the part that kills you, right? Like the buyers, people in our shoes who are objective, like we look at it and we say, well, yeah, I don't like that my value's down, but if I don't sell it now, it's probably going to be worth less tomorrow if you need to sell. Or you're looking at it, if you're flipping, saying, hey, I want to make X number and I need to insulate myself, so I need to get it for this price.
Yeah.
And you're not emotional about it because it's your business. But yeah, so many people are emotional about it. So
yeah, and it's understandable. I mean, for most people, they're selling the largest asset that they have ever owned and likely will ever own, right? And that's obviously a largely emotional thing. And for a lot of these people, when we're talking about, the basic stuff we would wholesale would be like 4 units and under. That was kind of our specialization, right? We did hundreds of single families, and with that, like, you raised your family there, right?
Yeah.
Maybe you remember having your pets there. You remember walking to school from there. You remember your commutes to work, and like you have all these connections that can't be ignored. And so when you're telling somebody like, hey, like, I understand all these things, I truly do, and the market has dropped 20% in the last few months, it's not easy for them to make that connection.
Yeah. So you're not really even trying with that anymore. You're not hitting anybody with flyers anymore.
We've really stopped on the flyers, and one of the reasons for that is I burned like 80 grand on flyers or something that had like literally no return. And so one of the issues the last few years too is like we done a bunch of different ventures, and one of them that I participated with was like Cashflow Tribe, right? Which was like an educational teaching platform. I think it's still operating, but I've no involvement there. So
you exited? Were you like a partner in that?
I was just primarily doing education on there for wholesaling.
Yeah, because that was like you and Matt were involved in that, and I think, was it Ben?
And Ben, yeah.
Yeah, okay.
But one of the challenges there is like we really like put the speakerphone, put it on blast that like wholesaling is one of the ways that you could actually enter real estate. It worked very successfully for me. Built a sales team, 10, 12 people, maybe a few more than that, of just guys that had no experience and were able to generate literally hundreds of thousands of dollars of revenue with fairly basic training. I mean, like, we developed a fantastic set of systems and processes to be able to handle that amount of volume, and we cultivated a great buyers list. So I think those are key success factors. But we were essentially able to take people with zero real estate experience and turn them into high performers in the industry in almost no time. I mean, like sub 12 months for a lot of these guys. And that's where, when we taught a lot of people how to do this and how we were doing it. And
So
then
you
we
basically
kind of
taught what you
flooded-
learned? Like you learned this sort of from Matt and team, or like how did you learn it?
just brute force. Like we were out. So Matt had no idea how to do it. We basically stole the strategies from the Americans. Like,
Yeah, because you guys
in the
were
States-
early on in this, right? Were you among the first like that were really on the wholesaling train? Because then obviously Luke popped up as a big wholesaler.
Luke was probably the like front runner.
Yeah, Luke-
right. And he
Luke
was doing
started it.
great, and he had actually developed some really brilliant systems, and so
Yeah.
we borrowed a lot of his artwork as well. Right, like we knew exactly how he was doing things, and we just kind of took that and scaled it. Right,
Yeah.
and I think that was really. It was exciting, but we also flooded the market with things like the yellow letter strategy.
Oh yeah, like people got so desensitized to that because
Oh, yeah.
I remember first time I sent out letters, like I got so many calls I couldn't handle them.
Yeah.
I sent out I think I sent out 12,000 letters and my phone blew up. It was right before my wedding. I could not even go out to see these places.
I think we actually had a call around that time.
Yeah, 200 or 300. I had 200 or 300 calls and I couldn't even handle them. Yeah.
So I don't know over the lifetime of the business, but we would do drops where we would literally get 2,000 phone calls.
Yeah.
And so like one of the challenges with the business that was hard to sort of really devise was like, how the hell do you manage all this stuff?
Yeah.
What we opted for was a highly specialized process where every individual carried a little bit of the weight, right? Who's going to carry the boats? And so we hired like specifically someone to take the inbound calls. We hired a full-time accountant. We hired,
And these are all local hires?
yeah, they were all pretty much
People who were
London-based.
connected to you? Was it
Yep.
an Indeed ad or it was like through your network?
We paid a recruiter for the accountant, but it turned out to be a dude that I used to get, shit-faced with and party in college, which is hilarious.
Oh, okay.
He
Nice.
went to Laurier and he was studying accounting there and became like a financial sort of auditor. And
Yeah.
anyways, we hired him full-time. Like we built all this infrastructure out, which ultimately was rather expensive.
Yeah.
And we scaled really fast, and that was expensive too. And so we were sending hundreds of thousands of these flyers, but then we were also teaching a lot of other students how to send these flyers. And so like the market got really saturated. Like Canada's not that big.
Yeah.
And Southern Ontario is a lot smaller than Canada.
Yeah.
And we had a lot of people from Windsor, from Sarnia, from London, Kitchener, Waterloo, Cambridge, Guelph, sending these damn flyers. And so we ultimately kind of killed our own strategy, which kind of sucked. And that sort of led me to really be thinking a little bit longer too. Like, okay, this was the strategy to get you into real estate. How are you going to stay in real estate like forever, intergenerationally? It's buildings. You have to. You just have to buy buildings. So
you weren't really
started
focused on
picking
the
those up.
acquisition back then. You were just kind
we
of running your
wholesaled
business.
everything.
You
Best
didn't
deals.
acquire anything. Yeah.
Which sucks because we were like, there's deals that we got rid of that were literally amazing. Like if I had that deal come across my freaking desk today, I would lose it. I'd buy it in a minute. And to be fair, it helped us to grow to where we're at, but it was also like, if we kept half those deals, there would be so much wealth to be, passed down intergenerationally. It would be disgusting.
Yeah.
Because we actually did, like, we found some terrific deals. It's
I can imagine, right? I mean, everyone's got a situation. There's some people who just don't need top dollar and don't care.
Yeah.
And they just need what they need, and you give it to them, and they get on out of there.
Yeah, an interesting insight we developed throughout the last few years as well was that a majority actually of our sellers were investors. And that's not something I ever expected. Like if you were like, who's going to be the seller? It's like, well, the distressed, as an archetype, like the distressed single parent that's like just lost a job or something is, I think, what people think about. What we found a lot more often than not was we were buying from other investors, right? We were buying from the tired investor that's just like, I've kind of done what I needed to do here. The market's appreciated so much in the last 15, 20 years that I'm willing to sell it now. We'll even hold the financing. We'll do whatever you need or allow you to renovate it before you actually close, like with an option or anything like that. And they just wanted out of the deal because they were tired, right? And they're kind of getting sick of Ontario's Residential Tenancy Act and the Landlord Tenant Board and everything like that. And I respect that.
Understandable.
It's a pain in the ass to own buildings here, but and I do actually think it's a bit more of a young man's sport. Like it's not set up for the 75-year-old guy who just wants to collect his cash flow.
They don't want to fill out that paperwork and go
No.
through that process. It's just because it never used to be like that, I'm sure. I mean, I don't know when all these laws came in, but I'm sure that in that guy's lifetime, there was a time where it was, you didn't pay, get the hell out.
Yeah. Well, and things are obviously evidently very different today. And that provided us a lot of opportunity to talk to these people and just say like, hey, like we recognize we're probably overpaying for these buildings, but it's also probably going to continue appreciating because the market was so crazy. Like when money is being lent out at free, below inflation numbers, then the market's going to be on a run. And so
we're still there, eh? Like, I mean, for now, we're still at below inflation.
Like sub-inflate, but inflation's just horrifying at this point.
It will start to look a little different. I mean, but especially knowing that it's underreported, that will probably be there for some time. Yeah. I would agree with that as well. So I think that's where we really just sort of changed our methodology over the last year to really go much more hand-to-hand combat, right? Like where I much rather post ads or do door knocking or just even attend real estate events. Yeah. Right. Like that's where a lot of our sellers are coming from. They're these guys with large portfolios. Yeah. They're ready to exit. Yeah. They're happy to exit with somebody that is prioritizing speed and convenience rather than, walking through 100 parties on MLS or going through anything they don't want like that. They just want to do it. So that's where we've shifted our priority to more hand-to-hand combat type things, self-generated leads from our salespeople's perspective. And from our perspective, it's just what I did was I just massively increased my splits to the salespeople and then just expect less revenue in general. So pared that business down a fair bit. And that sort of got me thinking too about, what are the opportunities now to connect with people, right? And that's ultimately I connected again with you as well. And I'm just like, God damn, like the last few years has been so frustrating to be sort of isolated from all of the people that we used to see routinely, right? Yeah. Like it wouldn't be out of place for me to run into you once a month or at least once every other month. Yeah. And now it's been what we're saying 4 years or something. I can't even believe that. That's crazy.
Stupid. Like it doesn't make any sense. So my one of my larger goals as I was kind of reflecting for the year was like, well, what do I do for 2023? Like, what should I prioritize? And I was like, people need more connection. Like it's gross that I haven't seen a lot of the people I would see routinely. Like even Luke, we brought up Luke this podcast, right? Or the Sean Allens or even Jeff I haven't seen for a long time. And I think a large part of that is we've just been isolated. So
but you guys all used to work together, right? Like you, Matt, obviously Matt just decided, hey, I'm done with all this. I don't know if he got rid of everything. It seems like he probably did make a move in that direction and then sunk his money into what he's got up there up north. And you still go up there, right? Sometimes?
Yeah, I spent a few weeks there not so long ago, and we did split our attention a little bit and went reasonably into like the Web3 crypto NFT space for a little while and did extremely well there, which was fortunate because I know a lot of people might not have the same story.
Right. So did you guys get out before the crypto bust?
On certain things, yes. On other things, I would say we have a lot of like what some would regard as blue chip assets that are still like tremendously up from where we started. Yeah. But nowhere near their all-time highs, right? Yeah. But yeah, I mean, that was a fascination. This year when I was thinking through it and I was thinking like, okay, something needs to sort of change about my strategy here. And I recognize that like there's just a bit of a gap in terms of getting people together. So this year I am going to host a Canadian Real Estate Conference. Okay. So it just literally called it the Canadian Real Estate Conference. Gotcha. It's going to be in Toronto, September 9th. And I'm hoping to really just get people back into a room. Because like I have personally felt my networking, just general connections and like overall happiness has literally decreased for sure empirically over the last few years. And I think a large product of that is like feeling like you have these struggles that are unique, right? In terms of like hiring or managing people or running projects or raising capital or finding partners, like all of this stuff has felt harder. And I don't actually think it is. Like, I think it's bullshit. I think it's all still simple. I think people still want to work with each other. I think people still want to generally get connected. And from my perspective, we just lack some of the areas to be able to do that. Like there are conferences, there are meetups, but
they're starting again. I started mine up again.
And I saw that the other day. I noticed that, and I think it's just we need that. Like I think we literally just need that. It's so much better to play in this industry and to play this sport when there's other people to play it with.
So it's a lot better. Yeah. I mean, there's just so many people who have figured out so many things, and then I'll sit here feeling like I'm figuring out how to invent the wheel.
Yeah.
And that's the last place you want to be. And when I interview some people and I just see how they have every last little detail figured out, I mean, there's no way they did that on their own.
Yeah.
Like they leveraged books, they leveraged conferences, and you ask the questions and you'll find out that's pretty much always the story.
Well, and I think of my own sort of story and trajectory, and 4 years ago, or if I just go 5 years ago, like I was like, yeah, owning a building would be great passive income or whatever. But that was like the extent of my knowledge. It's impossible to come up with the vendor takebacks, to come up with wholesaling, to come up with, how to properly network at these events. Like it's impossible to learn all these things on your own. And mentorship has been an extremely valuable pillar in my journey. And so has been just being in these rooms. Like I was able to talk to some of the guys that I regard as the, the pioneers in some of the things that I'm doing, like being able to talk to Luke Boyron at the Right Club and all those events that we used to go to, and just sort of like, hey man, like how are you doing this, right? And him being willing and charitable enough to just entertain me as some 24-year-old kid who didn't know anything, that was incredibly valuable, right? And being able to work with Matt for a number of years and learn how to raise capital, learn how to manage these buildings, and a lot of it came at a decent expense to myself, right? Like volunteering or like doing whatever it took to just be in these rooms with these people. Sure, like there's a cost to it, but it saves you years. And I think that the time's the one piece that you just can't replace. Like unless you have unlimited money, then you could probably pay to learn every other skill that you ever want or hire the people. But until you get to that point, you need these rooms. Like you must be able to, or like yourself, like for people listening to this podcast, like what an incredible opportunity to just not have to make the same mistakes. I listened to the accounting one the other day that you have published. Like what a brilliant resource. Things that I was listening, it was like, son of a bitch, I had no idea about that, right? Or like you were talking about on that particular episode, investing in the States. And you're like, do not do this structure. Like you definitely want the LP, right? And you're just like, okay, like, I hadn't even really thought through that process, right?
That's why I thought the good model was to have a meetup and an education. So the podcast was the education, the meetup is where you go and ask your questions and learn and make real people and people type connections. Because I agree with you. Nothing replaces seeing people. And I think that there was no way that society would have become as divided as it was had people been able to really just connect with each other without that fear factor.
100%.
Which, I mean, we were both very vocal about our level of distaste for all that insanity. And, big reason why I went down to the States and, saw opportunities there. But what I wanted to dig into a little bit, in our last little bit of this podcast is you talk about those influences. And I think that by structure, Matt's sort of idea to host that house and have, 4 or 5 guys with a common goal under one roof, you can't replace that. Like that's something that I think that you all benefited from. And allowed you to, like you said, sheer force. I think, like when you get that many together and you put that goal together, hold each other accountable, like you're all there for a reason. Pretty cool things happened, and I was very, very much envious back then, saying, man, I wish that before, I was in a long-term relationship, I had figured something like that out. Back in my early 20s, had figured something like that out.
Yeah, So recently, Bob Iger's taken back over at Disney, and one of the things that he started off with was this statement, this proclamation that like you just simply cannot have the level of creativity and drive required to operate Disney at its potential unless people are connecting person to person in the office. And I really believe in that. Like I actually think that a lot of media richness, a lot of social connection, a lot of intimacy is lost over Zoom or other equivalent video conferencing things. I really don't think that you can have the same conversation.
No, you can't. You can't because there's things that are connected about us in the same room that it's more than just a visual and an auditory, right? Like that's that human connection thing that we can't even explain.
Well, even just the level of focus.
Yeah.
Like I'm looking at you right now, completely not
distracted.
I'm running
You're not on a web browser.
I'm running a subscript in my head that okay, there's a tenant moving in tomorrow. I know I need cleaning. Do we get the lease? Do we know that he has proof of insurance? Do we know I'm running that subscript, but I'm not clicking around on a browser tab. Looking into it right now. I'm not typing that email, right? I'm fully invested in understanding.
It's way more, and that's why I do this, right? I've gone back and forth with Zoom, and I've always found that the connection's better, the conversation's better when we do it this way. I mean, occasionally we'll go with Zoom. Also the audio, like just so many pros, and of course I lose some people because they're in Edmonton or whatever. But those are the rare exceptions that I'll make occasionally. But yeah, this is the way to do it, I think, and I'm glad that we're back doing this kind of thing.
Yeah.
And it'd be good, for us to connect more often. I don't know. I don't get down to London much with a 1-year-old. So
yeah, for sure. Yeah, I'll be living in Collingwood the next year, but that house was really quite a groundbreaking idea, right? Like, can you get 6 people or 5 people to live under one roof that are all like essentially like you did in college, right? And how fun was that? But it was
with a common
it was
goal,
all fun with no objectives, and the purpose of this was to have that same level of fun, camaraderie, shared struggle, shared goals, but then systematize it, right? Like every morning you notice when the guy beside you is slacking. You notice if they're not up on time. You notice if they're not actually making time for
hold
their
each
physical
other accountable,
fitness, right? You notice what they're eating. You notice everything, and it gives you an opportunity to constructively say like, hey man, are you doing your best, right? And a lot of the time we do distract ourselves, and I think that's one of the most dangerous things of the last few years has been alone at home in your home setting pretending to be productive. You weren't.
And I think that's the enemy of any entrepreneur, any self-employed person. You sometimes don't know what to do next and you do busy work. I've done it many times.
Oh,
way
man,
too many.
I'm the king.
Way too many.
I hold the belt in all weight divisions of procrastinating or not.
And you found that the house helped you break you out of it, right?
Of course. I mean, how am I going to pull out my phone and start sending an email if you and I are podcasting? Yeah,
exactly. It kind of forces you to do things. It forces you to be systematic.
Yeah.
And I know from I think a lot of it is about knowing yourself. Like for me, I would benefit from somebody forcing me to be more systematic.
Yeah.
Like I'm identifying that as something that's been a weakness. Doesn't need to continue to be, but I should probably adapt to it a bit better.
Well, I think most high performing people are distractible, right?
Yeah.
We want to be high performing at everything.
Yeah.
And so you see something, it's shiny, you attack it, right? And you attack it with the same sort of commitment and devotion that you do everything else. And so you're like, son of a bitch. So you need people to keep you on task, to be working on the things that are your special abilities. Yeah. And I think that's one thing the Mansion did really well. Now, it was a double-edged sword because it's very easy for people to take away, like for that to work, everybody needs to believe the dream, right? The moment that one person is like swimming against the current, it offers an opportunity for the entire lot to get really, really dangerously off track. And so ultimately it was this, it was a large endeavor to keep that on track, but it worked.
Did you have to replace people probably pretty regularly? Did you have to have conversations and say, hey, this isn't working out?
Yeah. I mean, that did happen, right? And a lot of it just came down to, the sustainability of that type of model. Like how long can you be at your best?
Yeah.
And I think for a lot of people, if you ask that question honestly, it's not that long. Like most likely you can't hold your best performance for much longer than a week, a month, 90 days, right? Like,
so you got people who've been in there for a year just grinding it.
Yeah. And
like, were you working all hours? Like how?
Yeah.
Like you're working into the night. Like what about girlfriends, things like that?
No, it was not allowed at the house, right?
You can't bring girls to the house. So you're leaving? Like when do people leave to see their girlfriends?
Whenever there wasn't things to do, but there was always things to do. So like we built a really high performing culture there, but if for a moment you let that slip, it very quickly degenerates, right? It regresses to the mean. I think at the average, we're all basically not our best selves. And there's lots of opportunity to be, and that includes obviously myself, right? Like I'm not talking about them. I'm talking about everybody involved. Like if you're not extremely accountable and objective about the experience and fully bought in, it slides quickly. So
how long did that last? Like that's not a thing anymore?
No, we did that for 2 years.
So up until what it would have been into 2020 sometime?
Yeah, I would say so. And then I think COVID, like, relatively put a bit of a wrench into a lot of things, right? Like, and this is the start, right? Yeah. That was the start of me realizing that, like, what we were doing, like both in the house and also in driving down the 401 every single week to the meetup of the day. So it was like London on Fire. There was the Right Club. There was Onria. There was a handful, Lyric. There was a handful of other things that we just wouldn't miss. Yeah. And that type of connection, the people that we saw, watching people go through their journeys, learning like getting that shared knowledge, that tacit stuff where like maybe they're never going to write it down for themselves, but if you need that problem solved, you'll ask the question and they'll have it. Yeah. And that type of thing, like that transfer is like invaluable. There's no way to get that any other way in my opinion, right? Wow. So I found myself really suffering from a lack of that the last couple of years. Oh yeah. Like
I could see because it's way more of a shift for you because of where you were with the integration with all those people, and then to just go to like a screeching halt, that would be hard.
Yeah. It was like full stop. Yeah. Right. So that it was just weird. And like, I'm a social introvert, if you can buy into that. Like, I love to have my own space and my own time, but I really, really, really appreciate being able to just like what we're doing right now. This is amazing to me, right? Like to just be able to sit down, have a conversation. Hey, what's going on? Like, what's new? What have you learned? What were some of your biggest mistakes? What were your biggest challenges? What would you do differently if you were in my position? Like, how the hell do I skip some of the things that it took you thousands of dollars 100%. And a bunch of time to learn?
Yeah, on that note, like lay it out for me. Like you obviously took away some big learning points from your experience working with, Matt, living in the house, and then of course carrying on the business. Structurally in your day, goal setting, like what's the magic sauce? How do you put it together? Obviously, it's garbage in, garbage out. I can tell you're very much putting in good things and getting good things out. So talk a little bit about that.
Sure. I do believe in having a routine and a structure to your day, and that will make you a lot more productive. So, one of the most powerful things I think anybody can do day one it's free is just start using a calendar, right? So like you should have everything in your calendar laid out that you're going to be doing. And I find that the calendar helps you to understand what's actually a priority for your business. And that helps you to stay productive, not busy. And it helps you to be on time and keep your promises.
So what goes in the calendar then? I mean, obviously meetings, this is in your calendar.
Yes.
It's in mine too. But what else?
So there's different buckets everybody has in their life. So I would say there's like spirituality, friends, family, health, wellness, and then wealth. Yeah. Right. And I like to have all of those things in my calendar. Yeah. So my calendar is relatively full. Like, if I go over a minute on eating or something like that's not the point, that we're going to like micromanage our every minute of the day. The point is like, if you actually care about something, you should probably be measuring whether or not it gets done. Yeah. And by putting it in your calendar, even if you don't do it, you didn't do it. Yeah. And so that can at least be a motivation to get you back into that thing.
So do you sub break that down in terms of wealth, like lead generation, phone calls, connecting with other investors? Like, do you have that blocked, and where, and like, how do you decide? And I find that one of the hard things with that is sometimes a schedule becomes a bit of a flow, and you get things that come up and they eat into that. How do you handle all that?
Yeah, so one way that I've handled that particular experience, when you're in a bit of a flow and things, you have some other thing you need accomplished, but maybe it's not the right time for that. I like to group my activities in terms of their nature. So like if I need to do lead generation, for example, that generally means talking to people. So I might bucket a bunch of my talking to people activities together, so that I'm in the mindset where like I'm thinking about talking to people. I'm thinking about smiling on the other end of the phone. I'm standing up. I'm high energy. I'm well rested. and I'm not thinking at that time about the emails I need to be sending, or the accounting that needs to be done, or even necessarily like the workout. Like, it should already be out of the way so that I'm not like in the groove of talking to somebody, and then I'm like thinking about, oh shit, what am I doing lag day today or something stupid? Like, I like to group all those activities together. And one of the easy ways to do that is to pick days. So like, a lot of people, for example, are used to like a slower Monday. And so like, rather than fight everybody on that, why not just have your meetings be on a Monday, where it's like, Monday is not really a productive day. It's about laying out the productivity of the week, and then have your midweek activities be highly productive, where maybe that's where a lot of your lead gen's getting done, or a lot of the things that will actually bring new money into the company.
I like the idea of meetings on Mondays. That's a good idea. Because I'm a guy who just like can't stand meetings, especially like Zoom meetings and stuff like that. But I mean, generally speaking, like, I love this kind of thing. I'm not a big fan of like business meetings. I've happily talked to investors, talk to, people like that. But I like the idea. You put it all on a Monday, and then even if you don't feel like you're really crushing on Monday, well, now you got Tuesday, Wednesday, Thursday, Friday.
Well, one thing that Zoom did do reasonably well is it allowed us to all kind of have these meetings where you can be like, do the pajama Monday thing, where like Monday feels like a Sunday, but you're actually getting a lot done for the company, where the next sort of focus. So like, own your calendar and make sure that you own your day from that perspective and hit all your buckets. The other thing is lead and lag measures. Like, what's actually important? What's the mission? What's the measurements that are going to tell us if we're on track for that? And how do we measure actual success? And those are your lead and lag measures. So for us, it would be like flyers sent, doors knocked, like calls made essentially for lead gen. And then that would be a lot of the lead stuff that we could measure. Like, did we actually send out the appropriate amount of marketing, or knock the amount of doors, or make the amount of offers that would allow us to have success? And then what is success? Well, maybe we have a $3 million target this year. So success from that perspective, from a lag measure perspective, is like, of all those offers and calls made and everything, how many did we close? What did that represent on a dollar figure? And how far away are we from the goal? So that tells us how to actually better manage the calendar. Like, if the calendar is not seeing enough success in the lead measures, you obviously need to make more time in your calendar for that lead measure to occur in order to get the result at the other end, which is your lag measures. So that's a large part of it. Some other large challenges, I would say, structurally, are understanding, like, what are you great at, right? Like, in our first podcast together, I talked about, like, I had done some of the drywall and contracting stuff in that first project, and like, I'm just miserable at that stuff. Like, I should just never do that, ever. There's no excuse for me to do that, because I'm not good at it. It takes me forever, and by the time it's done, it doesn't even look half as good as the guy who would have done it twice the time, right? For a little bit more cost. So I think understanding what you're really good at is important. And then the biggest challenge that I have to date is, how the hell do you actually hire great people that can deal with that? And I think that HR is honestly, it's like the subject that nobody cared about when I was in business school, but it's literally the biggest problem apart from sales. If you can figure out the sales part, you'll probably survive long enough to have the HR problem. But then the HR problem, to me, is still one of the largest challenges anyways, is to just understand, like, where are great people? Where do they come from? And I think entrepreneurs often, they want to like hire people that are like themselves, but we're the worst people to hire. That's why we don't have jobs, right? Like, we actually are terrible to hire. We're unemployable to a large extent. So I think developing systems and processes for hiring would be the next thing, is like, early on, if you're doing everything yourself, at least write down what that process looks like, so that when you hire somebody, they can very easily become trained and effective and productive on your team to be able to replace you. And I think by doing just those three things, like using measurements to understand how your day should be laid out, laying your day out to deal with that, and then using some, game theory optimal plays there. When the game changes, change your behavior. Don't start doing the same thing. And then figuring out how to best systematize, process, specialize, and write down how you actually do things.
Create your systems. Yeah. Michael E. Gerber's E-Myth Revisited. That was one of those cool books that I read way back because Tim Ferriss recommended it. And cool book. Basically said exactly that. Everything. Like anyone should be able to pick up your manual and do the job because they see everything's written out and shows how to do it.
Yep.
I haven't done that, but I found like Zoom, to its credit, for screen recording, just how I do tasks.
Oh, it's brilliant.
Yeah, I just explain what I'm doing, and then I put it in a knowledge bank for my assistant, who now she knows how to do that task. And if she ever needs a refresher, it's right there.
Yep.
And that's kind of the way I've done manuals. It's not written, it's video format, but it still does the same thing.
Well, that's fantastic. We have the same thing. It's a Google Drive.
Mm-hmm.
Shared between whoever it would be relevant to, and that's the same thing. Screen recordings from Zoom of just like, hey, here's how you find these files, open them, modify them, save them, and
bookkeeping entries, things like that. Just make a video about it.
Yep.
Yeah, that stuff all can be automated once you know how. So, what would be your top 1-2 book recommendations that you would say people would benefit from if you have like business or mindset, whatever?
Okay. I was a huge fan, and I've read it many times. Regardless of what you think about the character, I believe that the book is fantastically useful. And that would Be Obsessed or Be Average by Grant Cardone.
Okay.
Again, I think there will be people with split reactions to Grant Cardone. He's very bombastic. He's very loud, and I appreciate that turns some people off. But I do believe that book, if you read it for what it's worth, it is a fantastic mindset for the entrepreneur who wants to not only get started on almost any type of business, but stay in the game. Like, I think you actually do. You could think he's being a little superfluous or bombastic, but like, I don't think it is. Like, being an entrepreneur sucks. Most people shouldn't do it. I think almost everybody shouldn't do it. And then the people that do need to be ready and willing to commit to like really hard times. Like, there's just adversity all over the place. Like, unless you have a ton of capital, and even then you just find ways to blow it in.
You invest it into things and then you find you have none.
And so I think that Be Obsessed or Be Average is really great because it covers a lot of those points that like you actually just need to become great at selling yourself and then staying in the game long enough for it to matter. I think that's important. The other book that I find really impactful was, there's two by the same author, but Extreme Ownership by Jocko Willink, I found to be very great, which really helps you to build the mindset out that like, sure, somebody didn't do their job, but like that's actually on you. And as an entrepreneur, you need to really understand that whenever an employee, whenever somebody, a stakeholder in your business, isn't doing what they're supposed to be doing, in air quotes, that is honestly just something that you can take control of. Like, I'm not saying go do the work for them. I'm saying build the process out so that experience doesn't happen twice. And I think that that's an extremely important lesson that there's, in that book he covers, there's no bad teams, only bad leaders. True. That's a fact. Right. Any of my shortcomings in business have been because of me. Right. It's
at the end of the day, it's always your responsibility. Whether fault, you could argue that's not even worth talking about, but it is your responsibility.
Because fault doesn't change the outcome, right?
It doesn't. So what does it matter whose fault it is? If something goes wrong or one of your employees does something wrong, at the end of the day, you could have done something different that would have prevented that. So whatever, it doesn't matter. Responsibility.
And a large part of that too is actually decentralizing command is one of the points that he talks about, which really just means like, you don't need to tell people how to do their job, and you shouldn't need to be there, being that controlling micromanager. You actually don't need to do that. It's much more important to convey to them your intent of what needs to be done and building the systems and processes to guide them to do it efficiently every single time. So you get the same result with any person doing the input. So
in building the culture, I think is a big part. That's probably the hardest part that the leader has. What kind of culture you're creating there, and what's expected. How do you treat your people, and how do they expect you to treat them, and then how will they in turn treat others?
And so the second book that really bridges more into that idea from that same author, Jocko Willink, is called Leadership, Strategy, and Tactics. And that's where he having read Extreme Ownership, a lot of the like strategies. Now, Leadership and Strategy and Tactics is the book that really covers like, okay, you know all this stuff, but implementing it and why it's so important to get it right is like completely the difference between having a high performing team and having a team that just maybe they get the job done, but it takes twice as long and they hate doing it. And I think those are really important lessons to learn. And a lot of it is a lot of it is seemingly evident. Like when you hear it, you're like, oh, I kind of understand that. I should have known that. And a lot of it is counterintuitive, where you're like, you're hearing this and you're like, oh, damn, dude, like I made a lot of mistakes. And like reading that book back, like when I think back on some of the decisions I've made and leadership strategies or, things like that, like son of a bitch, I'm like, man, ego is a big problem. You got to have humility, right? You have to be able to lead people that want to go with you. And one of the best ways to do that is to set the example, right? Like you can't be telling people what to do. It just doesn't work. It doesn't work with your kids. It doesn't work with your dog.
So you're saying lead by example,
lead by example, anyways, the book will cover that a lot better.
No, that's great. That's great. 3 books that I have not read. So
really?
Yeah, that'll be good. I've heard of Extreme Ownership, but I haven't read it yet. So
it's tremendous.
Yeah, I've got like probably easily over 100 books in my Audible, but we'll have to add a couple more. I got a few credits to use. Okay, so Adam, we've gone a little over time on this one. Where do people reach you?
So I think Instagram's probably still the best place to find me. So it's Adam JD Martin on Instagram. I would love to, if you guys are interested in connecting in person, there will be the Canadian Real Estate Conference. So there should be a link to that below.
You have a link they can already buy tickets to that?
Yep. I pushed it live this morning, actually. So your listeners will be the first to do it. Did a test transaction. Everything works. So
all right, cool.
Listeners of this podcast too get 15% off. There's a discount code Hines there already. So excited for that. But yeah, really just Instagram or we'll see you in person either at that event or your meetup or any of the other events. I'm planning on attending almost every meetup that's around. So
love it.
See you in person.
Cool, man. Well, I'll see you at the meetup on, I'm not going to give the date because by the time this airs, it'll be different, but be at the meetup. We'll see Adam there. Okay.
Awesome.
All right. Thanks, man.
Cheers.
Appreciate it. Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help it help more people. I really appreciate you tuning in. I'll see you on the next one. There are a lot of people out there talking about the infinite banking strategy and whether or not it makes sense for them. To find out what it's all about and if it's a fit for you, visit controlandcompound.com/Andrew Hines, where my audience can gain exclusive access to books, podcasts, and webinars tailor-made for real estate investors. Are you interested in getting started in investing in the United States but not sure where to start? Why not attend the Investing in the U.S. Mastermind hosted by myself and Nick Van Dyke on March 4th, 2023. Nick and I will be covering topics ranging from A to Z, new construction, multifamily development, Airbnb, and much, much more, as well as the basics, including opening a bank account and understanding the proper corporate structure. We'll have several keynote speakers touching on very specific topics. And most importantly, you'll be sitting in a room with people who are highly focused and highly committed to investing in the United States. For more information, visit investingintheus.com and send me a DM on Instagram for a special discount code. I'll look forward to seeing you at the event.